Alright guys, so in this video I'll be breaking down the best semiconductor companies to invest in as digitization triggers a super growth cycle in this industry. So what are semiconductors, or semiconductors as the Americans like to pronounce it? Well, they're the building blocks of our digital economy today. So look around you. Everything you see requires semiconductor chips to work. From your handphones, your tablets, your laptops, your desktops, to now increasingly cars require chips because of automation in cars. Cloud infrastructure requires chips, 5G networks. So right now, there's a huge global demand for chips, so much so that there's a supply shortage of chips. And this demand is only going to grow in the next decade or 2 decades because of 3 things. Number one, technology, digitization, which is accelerated by the COVID pandemic. More of us are now working from home. We require faster and better computers, phones, smart wearables. The second thing would be the demand for more energy efficient products like electric vehicles. And finally, the Internet of Things, where eventually everything is going to be connected. Your refrigerator is going to talk to your watch, it's going to talk to your car, it's going to talk to the TV, the lights, everything's going to be connected. So for this to happen, we need more and more semiconductor chips. And this is again triggering a super growth cycle in this industry. Now the question people have would be, so what do I invest in? There are so many companies in the semiconductor space. You've got AMD, you've got Intel, Nvidia, Samsung, ASML, Qualcomm, Applied Materials. Which one do I invest in? It can be pretty confusing. So let's break it down right now to see what are the best semiconductor companies to invest in to ride on this mega growth trend in the decades to come. First, understand that in the past, the semiconductor industry was a lousy industry to invest in. Why? Because there were too many competitors, like a battle royale in wrestling, right? So when there's so many competitors, there's no one company with a competitive advantage. No company had an economic moat, so they all compete on price. So when there's a lot of price competition, all the companies have low profit margins, and the entire industry was very cyclical. So they either made a lot of money during economic booms, or they lost a lot of money during recession. So it was a lousy industry to invest in the past. But what has happened since then is that many companies have gone bankrupt. Many companies were bought over by bigger companies, or they merged together. So in today's industry, you find that there's only 1 or 2 dominant players that dominate a specific segment of the industry. Now, as an investor, I only want to invest in a company where the company is a near monopoly. Because when it's a near monopoly, it has pricing power, it's got a sustainable competitive advantage, it can have consistent growth in sales, profits and cash flow, good profit margins, and low debt. And right now, within certain segments, there are companies I find we can invest in with very low risk and tremendously high returns. Now, if you take a look at the entire industry, I divide them into 6 separate segments, again of which there are 1 or 2 dominant players in each segment. So the first segment would be what we call foundries. Foundries are basically fabrication facility companies. So these are the companies that actually manufacture the semiconductor chip. And there's only one big player. We'll talk about it in a while, right? The second segment would be companies that design or manufacture desktop and laptop processors, CPUs. The third would be mobile processors, the chips that go into your mobile phone and tablets. Next would be GPUs, graphical processing units, memory chips, and finally manufacturing equipment suppliers. So 6 segments. In each segment, let's look at the best companies we could invest in. So let's talk about the first segment, which are foundries. So these are companies that actually have the facilities to manufacture the semiconductor chip. So before that, you have to understand about what makes a chip more advanced? Now, think about it. In the past, our phones were really big, right? Those huge bricks. Our computers were heavy and thick. So over the years, our computers become smaller, thinner. Our phones become smaller, thinner, faster. Our watches as well. So the only way that can happen is if the chips become more and more advanced. These are what we call the semiconductor chips. So what makes the chip more advanced and more powerful? The answer is the number of transistors that are found on a chip. See, the more transistors there are on a chip, the more calculations it can perform with the same amount of power. Now, every 2 years, technology allows us to double the amount of transistors in a chip. This is known as Moore's law. So for example, back in the year 2000, you had an average of about 42 million transistors in one chip. All right. Then in 2010, which is 10 years later, you now have 2 billion transistors in one chip. So the more transistors you have, the more powerful the chip is, right? But how do you squeeze more transistors into a chip? You need to make the transistors smaller and smaller. So 20 years ago, the transistor was about 180 nanometers in length. Okay, 180 nanometers in length. Then after 10 years, they made it smaller into only 65 nanometers in length. Again, the smaller the transistors, the more you can put into a chip. Now today, currently, they are able to put in about 25 billion to even 50 billion transistors into one chip. So to do that, they are able to make the transistor so small where it's currently about 5 nanometers. How small is 5 nanometers? To give you an idea, the width of your hair is 100,000 nanometers. Okay, and this is 5 nanometers, which is about just slightly bigger than your DNA strand diameter. So it's really, really small. Now here's the thing. The most advanced products today, like 5G phones, advanced imaging equipments, and electric vehicles, they require the most advanced chips with transistors less than 10 nanometers. And in the world, there are only 2 companies that can do this. And these 2 companies are TSM and Samsung. One is in Taiwan, one is in Korea. TSM is the Taiwan Semiconductor company. Samsung is from Korea. Now, why can only 2 companies do this in the entire world? It's because it's very expensive and very complicated for companies to upgrade their manufacturing facilities to be able to produce the chips with such small transistors. In fact, it takes about $5 billion to upgrade from one node to a higher technology node. So the industry is such that whichever company can do it first will get the majority of the market share. So it's a winner-take-all situation. So right now in this segment, the number 1 player is TSMC. TSMC is Taiwan Semiconductor company, ticker symbol TSM. They are listed on the New York Stock Exchange. Now, TSM has a 56% global market share in all the chip manufacturing. 56% market share. Okay? But in terms of the high-end chips, which are less than 10 nanometers, TSM has a 90% market share of these leading-edge chips. And that's why companies like Apple, AMD, Qualcomm, NVIDIA, they are not able to make their own chips. It is all outsourced to TSM. So TSM is basically the near monopoly in this entire segment. Now, far behind in the number 2 place in Foundry would be Samsung. Okay, so Samsung has about an 18% market share in total global manufacturing of chips and a 9% market share in the leading edge chips less than 10 nanometers long, right? And the thing about Samsung is that 60% of the chips that they make go into their own devices. And many competitors like Apple and Intel, for example, they are unwilling to use Samsung as a foundry because they compete at the product level as well. In fact, recently, Apple and NVIDIA shifted their business from Samsung to TSMC. So they've lost business because of that. In third place, even further behind, would be Intel as a foundry. Now, the problem with Intel is that they've had a lot of production problems and issues, and they are stuck at the 10 nanometer capability. They can't go lower than 10 nanometers. So because of that, Apple decided to shift the business away from Intel to TSMC. Now, I've been using Apple computers all my life, and you may have realized that the old generation of Apple computers, they use Intel chips. And the problem was overheating, and the batteries didn't last very long because of poor energy efficiency, right? And that's why recently Apple decided to make their own chips, to design their own chips, but they outsource it to TSMC to manufacture the chips that is now 5 nanometers, so it's more efficient and the computers last longer and they don't overheat anymore. So Intel has been losing a lot of its business to TSMC as well. So as far as this segment is concerned, which one would I invest in? You bet, I'll invest in TSMC because it is a 90% market leader in advanced chip technology. So in fact, if you take a look at, again, market share from Q1 2021, TSMC has a global 56% market share of the entire chip manufacturing market, followed by Samsung 18%, and the rest of them are fragmented. But again, high-end chips, they've got 90% market share, Samsung only 9% market share. If you take a look at the share price performance in the last 5 years between TSM, Samsung, and Intel, you can see TSM has been outperforming at number 1, followed by Samsung, followed by Intel. So the winner of the first segment would be, ding 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 ding, TSMC. Ticker symbol TSM. Now again, before I invest in a company, I want to ensure that it's got consistent growth in sales, profits, it's got low debt. At the same time, it is undervalued and it looks good on the technical charts. So let me just show you really quickly what that looks like. So the first thing is if you take a look at the financials, you can see that sales revenue has been growing consistently every single year. Net profit in green has been growing consistently. The company has got huge amounts of cash and a lot less debt. So in fact, it's got more cash than debt. I like that in the company. Consistent growth in cash flow from operations and free cash flow. So the financials look wonderful. But again, a great company is only a good investment if you pay a price less than what the shares are worth. You always want to buy when it's undervalued. So you got to calculate the intrinsic value of the shares. And if you take a look at my valuation over here, using my patented intrinsic value calculator, you can see that TSM has an intrinsic value of $139.85. So at the current share price of, right now it's like 116, it is currently about, it's about 17% undervalued. Once you find a great company, you know that the share price is going to go up over time. But the price does not go up in a straight line. It doesn't go up every day, every week, every month, right? The share price moves in wave patterns, wave up, wave down, wave up, wave down. There always is going to be retracements. So if you take a look at the weekly charts on TSM, you can see again, wave up, wave down, wave up, wave down, wave up. And currently it's going through a retracement, which is the best time to add shares of the company. So again, the intrinsic value is about 139, currently 17% undervalued, and I just added shares a couple of days ago, and if it retraces down to the 50 moving average, I'll add even more shares at about $99. But I already have taken a first position in TSMC. So for those of you who are in my Ultimate Investors Playbook, where you subscribe to my alerts of when I buy, when I sell, you would get this notification over here. As you can see, this was back on the 24th of May, 3 days ago. My students had the alert. I just added a new position into Taiwan Semiconductor, TSM at 113. This is a new UIP stock, and a deep dive research we presented in early June, which I've already done so, and you can see the alert here. I bought 176 shares at 113.48. All right, so from foundries, let's move to the second segment, which would be companies that design and or manufacture desktop processors. So these are the CPUs that go into your desktops and your laptops. So for this segment, there are basically two players fighting it out. That would be AMD fighting with Intel. Now, historically, Intel has been the established market leader. As you can see from the chart, the one in blue is Intel. They've been the market leader for many, many years. But recently, you can see AMD, the one in red, has recently overtaken Intel in terms of market share for desktop processors. So why has this happened? How did AMD overtake Intel? Well, right now you can see AMD has a 50.8% market share versus Intel has a 49% market share, again, in desktop processors. The reason is because AMD has superior chip technology. AMD's chips are of the 7 nanometer node, right? And how are they able to do this? Very simple, because AMD doesn't make their own chips. They only design the chips, but they outsource it to TSM. And because TSM can make the very advanced chips, TSM has allowed AMD to leapfrog over Intel. The other thing is that AMD has no supply constraints because it's outsourced to TSM, so they've been able to plug the supply and demand gap left by Intel. Now again, Intel has done very well in the past, but recently they have stumbled. They have had a lot of problems because of their manufacturing. See again, AMD doesn't make their own chips. They outsource the chips, but Intel makes their own chips. And the problem with making your own chips is when you have got production issues, you're not able to meet the demand of your customers. So Intel currently is stuck at the 10 nanometer node, and they are not able to go to the 5 nanometers, which is required for advanced products. So TSM has overtaken Intel in manufacturing, so Intel is in a bit of trouble in the short term. So because of this, Intel has been losing market share in terms of desktop processors to AMD because of supply constraints and less advanced chips. Could Intel catch up eventually? We never know, right? So, but right now in this segment, the winner is ding 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 ding, AMD. They are the winner in this segment. So if you take a look at the share price performance in the last 5 years, you can see AMD has outperformed the older established Intel. Now, the reason I hesitate to invest in AMD right now is although they've been doing well currently, but they don't really have a long history of great performance. So they may be a short-term one-hit wonder, you never know, right? So in fact, if you take a look at AMD's long-term track record, you can see their revenue has been not consistent, right? So revenue growing, dropping, growing right now. And again, profits have been inconsistent. They make money, they lose money. In fact, they went bankrupt before and now they're making money. So I'm not too sure about can they continue this performance in the long run, because when I invest, I want to invest in the long run. And you can see, but on the other hand, if you take a look at Intel, although losing in the short term, but in the long run, they have had much more success growing their sales more consistently, as well as their profits. But again, Intel also has a bit of a problem because they have got a lot more debt compared to cash. So they have a lot more debt compared to the other semiconductor companies. So again, I only like to invest if all the stars are aligned, when everything is great. If I've got one thing great, but something not great, I hesitate. I rather, invest in something else. Now, having said that, both companies are undervalued right now. So if you take a look at AMD, the intrinsic value is about $100, and right now it's about $78. So it's about 20% undervalued as well, right? You can see the wave patterns, wave up, wave down, wave up, wave down, wave up, wave down, retracing. So we may see a bounce in the share price. Again, I would say it's a great short-term trade, but in the long run, I'm not sure about their sustainability and track record, right? If you look at Intel is also undervalued. Intel is at $65 right now. Sorry, the intrinsic value is $65. Right now, Intel's at $56. So it is also undervalued. But you can see Intel, because of the short-term problems it's been kind of like in a range. But there's a very strong support you can see at $45. And it's kind of been like in this range like that. Okay, so again, Intel, I may do a short-term trade if the price drops to 44, maybe do a buy for a quick pop back to about $65, right? So I'll only go into Intel if it's really much cheaper. Again, Intel's a pretty good company, it's not bad, but again, right now, a lot of debt and having a lot of short-term problems. So they have to turn it around to make it worthwhile to invest in. So far we've covered two segments. Fabrication, foundries, where TSM is the leader. Computer processing, where AMD is the leader. So if you like this video, please give me a like, and if there's enough likes, I'll create the next part 2 of the video where we'll be looking at the next segments: mobile processors, GPUs, memory chips, and manufacturing equipment suppliers, to complete this entire deep dive into the semiconductor industry. So leave a like, subscribe to the channel for the next video as fast as possible. If you want to catch my latest videos, click on the subscribe button right now. Click on the bell so you get instant notifications once I upload my latest video. If you want to check out my online courses, go to piranhaprofits.com. We're going to learn how to invest and how to trade the financial markets and create an income from all around the world. If you want to join my live Wealth Academy program, go on to wealthacademyglobal.com and find out more about how you can learn investing and trading live online. This is Adam Khoo, and may the markets be with you.